All right, traders. This is Blake Morrow. You are listening to the Daily Roundup webinar. That's what you're listening to. So we're seeing a little bit of risk aversion right now. I actually just sold some Dow futures just a moment ago because I think we're flagging here. Let's take a little 5-minute chart. Just doing one of these. I don't know if I'll stick around here, but I think I will. Just doing one of those. Anyway, so we'll see if we can roll over here. The markets are under a little bit of pressure. I was worried about the S&P making a false breakdown. I actually traded the futures on the long side on the Dow futures when it looked like we did a false breakdown here below this low. But I don't know. I think that may have worked for the time being. You can see the Dow futures did the same thing. That's where I traded it right here, and I made 100 points. Which isn't a big deal after it's dropped 800 points, but it was a nice bounce. But I've gone short here, and like I said, I'm not sure if we're going to be lucky enough to hold that if we hit lows again from here. We're probably heading back down towards some of these support levels. S&P is probably the clearest one. We might see this consolidation take hold. So I mentioned earlier in the chat room, if you guys are in the chat room, that if we break 3070, we're gonna challenge 3000, and we're not too far away. We went fairly close. We were 3031. We might get down to this 3000 level before we find some sort of material support, whether it's today or later tonight. We'll see. Let's take a look at some of these currencies because, well, let's start off with the euro. The euro's come back down to what I think is pretty good support. Is right through here. But if the equity markets continue to show some selling pressure, then we might actually crack this and might revisit. Maybe. I'd be more interested in buying the euro down here. I'm not long at the moment, but I'm long some euro crosses, but not the euro dollar. I'd be more interested in buying the euro down here at like 112 and change, like 112.20. Let's see, from a Fibonacci standpoint, that would be, it's like the 112.07 would be the 78% retracement. And then you got the 618 that's got some of these lows down here. Canada downgraded by Fitch. Oh crap. Outlook stable. Watch the dollar Canadian just spiked. Whoop, there it goes. Yep. Yeah. Yep. You knew that was going to happen. The thing about the loonie, and this is the thing that we talked a lot about even this morning, is with crude oil selling off, it was going to weigh on the loonie, but now you just got Fitch adding fuel to the fire. So it looks like the dollar Canadian, in my opinion, is heading back up to this channel resistance, which would be just above 137, so like 137 and a quarter. So you guys are, listening in live right now. So I'm not going to, I can't send out an alert, but for those of you that are listening in, that's why the dollar Canadian just started moving really quickly. Let's go take a look at some of these commodity currencies. So here's the Aussie. Aussie's under a little bit of pressure, very similar to the euro. I think the Aussie might come back and revisit, 68.20, 68.30. Here's the Kiwi. Man, this Kiwi is at risk. Following the RBNZ, this Kiwi is actually at risk of breaking down. Like when I say break down, I'm talking like this. We break through 63.80, and that's going to get ugly, I think. I'm going to cover up my Dow here. I just covered up my Dow. It's for 75 points. If you guys were in the chat room, I told you I was shorting just like a little while ago. I just covered it up. I was basically short right here. I'm trading the futures, but I'm looking at this. I just shorted there and then covered it here. And then, as we consolidate, I don't mind playing to the short side. I just don't know if I want to play it at this moment. being short. So I don't mind taking profits either. There's that old adage, you know, you don't go broke taking profits. So, you know, scalping a little bit here and there, especially after such an elongated move, makes sense to me. We're having a little bit of, which we don't normally do. We were having a little bit of, well, I was having a little political rant in the chat room. I'm not going to rehash any of that, but I was thinking about something, and I want to talk about this really quick. You know, Democrats and Republicans, you know, they toe the line, or they stand their ground from their political beliefs. You know, I'm a Democrat no matter what. It doesn't matter who they put in, I'm going to vote Democrat. I'm a Republican, no matter who they put in, I'm going to vote Republican. I would say 30% of each base is very much like that, right? I think one of the issues, and I knew this because I knew a lot of people that were Republicans this last election that didn't vote. They're like, I'm not supporting Trump. I can't support Trump, and I get it. I mean, you know, a lot of people in my arena. When I say arena, like, you know, people in our business, you know, that are in the financial industry that watch. You know, I've watched Donald Trump for 20 some odd years on CNBC. So when you've watched the guy for 20 years, you know, I understand why some people are like, look, I can't vote for Donald Trump. But then the flip side was, during the election, they couldn't vote for Hillary Clinton. And I get it, okay? I get it. So a lot of people didn't vote because the polls were showing that Hillary Clinton was winning, and that you know, because she's winning, I'm not going to vote. So I get that dilemma. I think the market faces the same dilemma with Biden. You know, oh, well, Biden's so far ahead in the polls, I just can't vote for Biden because I'm a Republican, so I'm just not going to vote. But I do think that there is a risk. There is a risk that you know, Trump has probably turned so many Republicans, turned them off, meaning that there are probably going to be Republicans out there that say, you know, look, Trump's losing as it is. I can't vote for him, and so I'm just not going to vote. You know, it's like, because what's my vote going to do? You know, is it going to turn? You know, if he's upside down by 15 percentage points in the poll, what's my vote going to do? And I can't vote for the guy anyway, so we're just going to have to let this one go. So I think that's actually a pretty big risk, in my opinion, going into the fall season. People aren't really talking about that, but you know, there are so many people that have become disenchanted. Republicans, I should say. So many Republicans have been disenchanted with Trump and what he's done to the Republican Party, that I think there's going to be a lot of people that can't even vote for him. They won't even vote, and that's going to be that would be a problem, especially if the you know, polls are as skewed as they are now, if they continue to stay that way. But that's I'm not going to voice my opinions here. I did in the chat room, and I kind of kicked myself in the rear end for doing that because I'm not supposed to do that. So I'm just going to be quiet right now. However, I do think it's something that we need to think about from a market positioning standpoint, you know, as we head into the fall. We're going to be talking about politics a little bit more than I really am comfortable doing over the next few months, but things are going to get heated. But the dynamic, I think, is going to be, it's really, and the reason why I got a little heated is because now the Trump administration is going to end federal support for COVID test sites. And, you know, when, you know, you live in a state like mine that is being most affected by COVID out of all the states in the United States, it's a little, you know, it's a little upsetting. So, and I get how people in New York and New Jersey felt 2-3 months ago when the Trump administration's like, look, we're you guys will find your own ventilators. You know, so it's like, okay, so you're not getting the support you need. And so that's why I had a little bit of a rant. But I think the point I'm trying to make here is that there's going to be a lot of people he's off-putting. You know what I mean? So anyway, just some food for thought, and I think that's going to weigh on equities as we get closer to the election, especially if his popularity continues to decline. That's I guess the point I'm trying to make. All right, let me talk a little bit about the yen. This is the one that's kind of very surprising to me, is the dollar yen has spiked up and regained its footing after breaking down. And this is the one thing that makes me a little nervous about being short equities is like, okay, well, are all these yen pairs going to start bouncing back a little? I don't know. And I think that that's something that we, need to be cognizant of, especially after a 2-3% decline in a lot of these indexes. All right. Chad said, yeah, that's possibly me. Kevin said Trump did say he wanted to slow down testing. Well, of course he does. You slow down testing, there's less, we'll find less cases, right? I really don't understand that idea. It's like, yeah, I'm just not even going to do my taxes. If I don't do my taxes, that means I don't owe any taxes, right? Because if I don't do my taxes, then that means that I don't know what I owe, and if I don't know what I owe, I don't owe anything, right? Same idea. Dominic said, at least you know now why he didn't mention the issue when he was there. Well, yeah, when he was in Arizona. Well, I mean, he's not going to talk about something that, that's not working for him, right? Joe says, don't even try to come to my state without quarantining for 14 days. Yeah, it's pretty embarrassing when my state is the state where, like, no, thanks. We don't want any of you guys traveling into our state anymore. Rick says, politics fine is how it affects markets. Everyone has an opinion, and that's what most people don't want. I have facts and opinions, but I will be silent. Yeah, that's the thing, Rick, is I just try not to let it go. Sometimes it comes out. What can I say? But I'm going to try. Watch markets here. The markets are firming up a little bit. And like I said, I'm a little nervous about being short equities after a 2-3% sell-off. Little false breakdown here. I think if you really want to be short, like the S&P, you got to be short closer to 3,100. And then if you want to be long, you want to be long closer to this support, right? I think that's what you got to do around these parts. You got to be real careful getting whipped around these areas here. As far as currencies go, I think the dollar Canadian's had a nice little snapback. Watch this little false breakout here too, and also mind the fact with this dollar Canadian, we actually that's not what I want to do. We might have made a lower high, so that's something we have to be a little careful with right here, right? A little lower high. Dollar Mexican peso, same thing here. Let me grab this. Be careful with the dollar max up here. I'm not saying you should short it, but if you're long, you got to be a little careful, especially with equities trying to poke their head higher. Okay. All right, guys. Other than that, I'm kind of I'm long some Euro Aussie. I'm long some Euro New Zealand. The Euro Aussie, we're flirting with this big channel. I think this, whether we break out here or not, this is the 64.50 level. Whether or not we break out here probably has more to do with what equities do by the end of the day and what Asia does with what's just happened. Okay, so I took a little bit off because my average is like 63.50. So it's been a very frustrating not going anywhere. But the good news is, I mean, equities have been going up and it hasn't been going anywhere. And then the Euro New Zealand too, if we break above 176.50, that's going to be pretty bullish. So anyway, that's it. I'm out of here. You guys have a great one. Thanks for tuning in today. If I sound a little irritated, I am, and I'm just going to shut my mouth and just be quiet. All right, guys, have a good one. I'll see you in the chat rooms. Take care.